What's going on, everyone? Welcome to back to channel. Today we are going to break down one of the most interesting Bitcoin charts you'll probably see in this year. This is not a standard support and resistance chart. This is not a simple Fibonacci setup. This is not definitely not a random drawing on a screen. What you are looking at is predictive structural map generated with the help of the NEO-3 AI driven analytically system called NEO-3 is an artificial intelligence agent, as you see here, designed to detect natural market oscillation, liquidity behavior, accumulation distribution dynamics, and probabilistic reaction zones before the price reaches them. Instead of reacting to the price after the move happens, the system attempts to map where the price wants to interact with advance, as you can see in the chart. And as I said before, this is not the Fibonacci levels, this is not the support resistance levels, this is all AI solution. And today we are going to walk through this Bitcoin chart zone by zone, scenario by scenario, and explain what these levels may imply for the coming months. So let's begin. First, let's understand what we are seeing. This is the Bitcoin perpetual chart on the Binance displayed on the daily time frame. The colorized horizontal regions are not arbitrarily changed rectangles. Each zone requests a statistically important liquidity and behavioral region identified by the NEO-3 AI framework. And you'll notice two dominant colors as the green and the red zones, as you can see here, and only one blue and one green at the deep, but you can see in here. These green and red zones represents demand regions, accumulation areas, discounted liquidity, or areas where buyers historically regain control against the sellers. Red zones, these represents supply regions, distribution areas, premium pricing, or zones where aggressively selling historical appears, as you can see here. Something important. NEO-3 does not assume what every zone will hold. Instead, the AI measures reaction probability, liquidity imbalance, historical compression, and volatility memory. So, every zone behaves more like a gravitational field and a fixed support line. Because markets are not geometric, they are behavioral. And this chart is attempting to visualize behavior. Right now, Bitcoin is trading around 80K region. And at the close look. And the big green boxes represents big moves in the big cases. For example, 10 October moves represents here in the Bitcoin, and the Black Friday zones here in the Bitcoin in April 26th, April 25. And these ones are not the technical analysis. This is the news analysis from the AI. Especially price is sitting inside the critical transaction area between bullish continuation, shown as here, and the structural weakness, just like here. Let me clean for only levels, not the news events. The chart shows Bitcoin recently rejecting from the upper distribution region around 90Ks, 80Ks, 85Ks, also near the 90Ks, and near the psychological 100Ks level is really seems very hard to pass through. That rejection is important This rejection is important because the movie into the region lacked stable acceptance. Price moved here aggressively, yes, but could not establish equilibrium. There's, can you see equilibrium balance here? Bear support area, bull area. It means bull area means is not the bull's area. Bull support area and the bear target area. Just imagine like that. And wherever markets fall to the build equilibrium inside the premium zones, they often rotate back towards discount liquidity, which is exactly what this chart is monitoring now, as you can see. You can also see the white projected paths. This is the Elliott wave. This is the manual drawing. Suggests a possible multi-stage scenario. First one is initial decline, temporary recovery, another liquidity sweep, larger macro correction. Now, let me be clear. This is not saying the future is guaranteed. This is not probabilistic. This is the probabilistic behavior projection generated through the NEO-3 AI. The purpose is not the prophecy. The purpose is preparation. Let's talk about the numbered markers on the chart. You will notice the labels, K labels. These are not the Elliott waves only. They represent structural interaction points. Point 1. This area near the 80K region represents temporary stabilization zone. Let's look in that way at the chart. Price initially reacts positively there because liquidity becomes attractive, shorts take profits, and buyers attempt to reaccumulate right here. But notice something important, the bounce leg expansion strength. This leg expansion. That tells us the market may be the absorbing liquidity than the initiating true trend reversal. And the second point, this area projects rebound toward the 100 and 110K region. The chart even references possible geopolitically catalyzed US-China tariff tension. Let me open this again, this one. US-China tariff tension. This falls represent that. Now, this is fascinating because markets often use the macro narratives as a fuel to move what were already structurally probable. In other words, the news explain the move afterward, but liquidity positioning often predict the move beforehand. The AI frameworks is attempting to identify where those narrative-driven volatility spikes may occur. And the third point, this is where the chart becomes more defensive. The projected decline toward the mid 50K zone suggests loss of bullish momentum, failure to maintain higher highs, and possible board market delivering. This would likely coincide with panic selling, ETF outflow fears, macro tightening, or systematic liquidation events. And notice how price approaches another large green demand region there. Again, the chart constantly alternating between imbalance and equilibrium. Let's take a look about the major demand zones. Now, let's discuss the most important regions on this chart, because this is where long-term positioning becomes interesting. 44 and 47K region. This region. Just look at it. This zone is labeled with reference as Bitcoin ETF approval. This is the Bitcoin ETF approval. Where is the area? 44 and 47K region. And pandemic stimulus just before it, and Luna crisis. And also, quantitative tightening is represent here, and also Russia-Ukraine war represent here. This area is extremely crowded area, and Bitcoin can pass through this all areas very short time, and this means these areas will support us when we are turning back to the ground. Those are essentially historical memory zones, a place where the major markets narratives previously created strong transaction activity. Markets remember areas where massive volume occurred, emotional extreme existed, and institutional positioning developed. The memory becomes liquidity, and liquidity becomes magnetism. This is why NEO-3 pays enormous attention to untouched or partially balanced zone. The 31 and 34K region, this area is labeled, I made it in Turkish, but in English, last balanced demand zone. This wording is extremely important. A balanced zone means buyers and sellers previously reached temporary agreement here. As you can see in the graph, lots of time visits, lots of times works as support and resistance, and also this area is the SR flip zone, support resistance flipping zone. When the price revisit these regions after extended imbalance, markets often slow down, consolidate, or completely reverse trend. Not always, but statistically, these regions is matter. And if Bitcoin ever revisit this area, I will buy all my money as a Bitcoin. I will spend all my money to buy Bitcoin. I am the Bitcoin maximalist at this region because, as I said, this region is balance point, an extremely important point. And the extreme scenarios, now we need to discuss the lower projection. We don't want to see, but what if have to see? The chart shows extended bearish path toward the deep demand region under 20K. It's been 6,000 and 17,000. In my opinion, in my side, I am not expecting these levels. Maybe wicks to 30Ks or 25Ks is acceptable in the weekly period, but not the close after. Close under this area. This is the blue area. The 20K area, obviously the most conservative part, controversial part of the structure, and many people immediately reject scenarios like this emotionally, as I said before. The markets do not care about the emotional comfort, as you can know. They care about liquidity and efficiency. Now, does this mean Bitcoin must go there? Absolutely not. But the AI framework is identifying unfinished demand structures, historical inefficiencies, and extreme discount zones. The region labeled COVID-19 collapse. This region is COVID-19 collapse. Represents one of the largest imbalance origins in Bitcoin history. And the markets often revisit origin zones eventually, sometimes years later. Again, not certain, but structural possibility in my pocket. How NEO-3 thinks differently. Let's talk briefly about the psychology behind the NEO-3. Most indicators are reactive. They calculate moving average, RSI, MACD, volatility, their weights after price already moved. NEO-3 attempts something fundamentally different. The AI agent focused on oscillation behavior, premium discount equilibrium, volume absorption, liquidity memory, and untouched transactional zones. Instead of forcing the market into predefined indicator logic, the system attempts to observe market natural internal rhythm. This is a huge distinction. Because of the goal is not prediction through rigid formulas. The goal is probabilistic mapping through the behavioral structure. And that's why these zones often look unconventional. They are not drawn for a visual beauty. They are drawn for structural meaning. So, what if the key takeaway from this chart? Once again, what if the key takeaway from this chart? The key takeaway is the Bitcoin is currently sitting at structural critical region and in the box of Black Monday. The next major move will likely determine whether the market resume expansion toward the new highs and gain the bull area and make the new all-time high, or enters deeper rebalancing phase. The NEO-3 AI map suggests that volatility is far from over. And more importantly, it suggests that the market may still need to revisit unfinished liquidity region between next true macro equilibrium is established. Now, whether you agree with projections or not, the real value here is understanding the structure. Stop reacting emotionally, stop chasing candles, and reading the market as a living system. If you enjoyed this breakdown, make sure you like the video and subscribe to the channel and comment below. Do you think Bitcoin revisit 40K region again, or do we break into a completely new valuation, the super cycle era first? Thanks for watching, and I'll see you in the next analyze. Take care.